All right, so you said you like the idea of the strategy. You don't enjoy the poor risk to reward. It's easy to lose 12 to 14 ticks and then only make 4 ticks, but it takes a lot to get back to break even. You're down $700 in 2 days using the strategy going for 4 ticks. All right, so this warrants like a pretty big discussion, right? So, couple of things. So you said you like the idea of the strategy with the scalping. You're finding the risk to reward being a difficult thing to trade because if you take a loss and you take like a 12 to 14 tick stop loss, the challenge that you're going to run into is that if you're only making like 4 ticks on a winner, it takes a while to get back to break even and all that stuff. All right, well, here's the problem that you're not keeping in mind a few things. First thing is you're not always just going for 4 ticks. You have to adapt, right? Today you shouldn't have been going for 4 ticks today. You should have been going for at least 6 following the ATR rules that we look at until now. Now that the price action has slowed down a bit, it's different. But this morning's session, I was going for 6 ticks the entire session before the live stream because we had a bigger ATR. So you actually would be going for 6 ticks, not 4. So that's one thing to keep in mind. The other thing to keep in mind is that if you're not trading with a runner, your math definitely is different. So think of it like this. If you're trading with a runner and you take a trade, this one would have not given you a runner. But like some of these trades today, like this one, you could have gotten a runner there and gotten out down here with a runner. This one would have gotten you most likely you got a runner on that one. I don't know how this printed, but you might have gotten a runner on that one. You would have got a runner on that one. You could have scalped out bigger on that one. No runner on that one. This one, maybe you got a runner, maybe a runner there. Definitely a runner there. This one, you could have scalped the runner at the lows, which is just the scalp, so no runner there. This one would have gotten you a runner. So a lot of these trades would have gotten you runners. So if you're trading with like, let's say 5 contracts and you scalp 4 and then you go for a runner, that's different. I don't think you should go for runners if you're trading with less than 5 contracts. And the reason for that is that if you get a scalp on 4 contracts, that's still significant, but your math will be messed up if you don't. Because if you trade with like 2 contracts and you try to get a scalp on 1 and then you keep breaking even, you're just not going to have good math. So I think that it works better to do a runner when you can only leave 20% or less as a runner. So you need to trade with at least 5 contracts to do runners, in my opinion. So if you don't do that, there's other ways to do the strategy. So before you trade with runners, here's a few options for you. All right, first option is just do the strategy and scalp 4 ticks or 6 ticks and just keep doing that, but have a higher win rate. Easier said than done, but here's the thing. I don't think that you've gone through the full course. So you might be doing what one of the other people was doing recently. So we had someone in the chat the other day that was trying to implement the strategy and they were literally doing it wrong. And they realized that because they had not gone through the full course. So they were trying to just do the strategy based on like what they've learned from the live streams and stuff. And it's like, that's not the full strategy. Like a lot of the nuance is taught in my course and in my weekly calls. And so I think it's pretty crucial if you're going to implement a strategy to have gone through the full materials of it. Otherwise, you might literally be implementing the strategy wrong. And that would be something that would affect your win rate, which would definitely not work, obviously. Like if you might be taking trades that are not actually following the strategy. So that's an important thing to keep in mind. And that would affect your win rate because you might actually be taking trades that I wouldn't even consider valid trade setups. And so bear that stuff in mind if that's happening. I don't know if that is, but that's an idea. That's something that could be happening, right? So you might not be implementing the strategy the right way. You might be just trying to piece it together from some of the free materials. You might be missing certain rules that I cover in the course. So that's the first thing. Second thing, though, is even if you do have the strategy figured out and you have it down and all that, the challenge that you might be running into is if your win rate is low, then you're probably taking, or if your win rate's not high enough for it to work, then you're probably taking setups that are not even on here, right? So if you took losses today, let me know what timestamp they were at, and I can talk about those specifically, because you might be taking setups that aren't actual setups, right? Now, the other thing though, you don't have to scalp 4 ticks or whatever if you have a smaller position size. What you can do is a few things. You can do a couple of things here. So one is like this. Like, let's say you took this trade right here. You could scalp 4 ticks or 6 ticks or whatever. Another option is when it moves a certain amount in your direction, you can move your stop to break even on the whole position and treat the whole position like a runner. Now, you will have a lot of break evens if you do that. You will. So keep that in mind. That is one way to do it though, and you could actually just occasionally you'll get a big runner and you can just take a bigger trade. That's another way to manage your risk. There's actually a lot of traders who trade with a strategy like that. There's even people who trade with like a big risk reward where their risk is only like, they trade with like a 1 to 2 or 1 to 3. Most of the traders who do that move their stop to break even to protect themselves after a certain period of time. So that's another option. Another option would be you could trade this with a different way. You could go for a bigger amount, right? You could go for 8 ticks. You could go for a 1-to-1 if you want. So like here, let me pull out the risk reward tool. Where is it? Risk reward. So like, for example, let's say you went short here. I think I have it. Yeah, I have it set to 1-to-1. You could just go for a 1-to-1 if you want. Now, this would have been a tough one because it would have came within 1 tick of your stop, but it would have worked, right? You could go for a 1-to-1. You can trade like that. You just have to know that if you go for a bigger target, you will have losses sometimes because you went for too big of a target. But it still works. Like here's an example. Here's one. You would have got filled basically right at the low. Even if you didn't, it would have eventually went there. So that one would have worked with a 1-to-1. Literally just go back and plot the trade setups. Here again, risk reward 1-to-1. That one would have worked. There's gonna eventually be one that won't. I don't know. I'd have to like, I'm not gonna map out every single one of these, but I'm just doing this to show you. That one would have been right, pretty much to the tick. You can see to the tick it would have worked. Actually, that's slightly off. So yeah, right there, to the tick. So you can see like going for even like almost like a 1-to-1 would work, or maybe go slightly lower than a 1-to-1 because you can see that sometimes it's to the tick. But you could even go for a bigger tick target and it would still work a lot of the times. So just remember that, you know, there's a lot of ways to do it. Another thing you can do is you can enter it with a limit order further back after the price breaks forward, and then you can have a bigger target. So that's another way. You will miss trades if you do that. If you're just taking a scalp, you'll be able to figure out why a trade didn't work pretty much every time, like 99% of the time. Like 99% plus, you'll be able to tell why the trade didn't work. I can't remember the last one that I just couldn't figure out. Like, you can pretty much figure them all out. That's the cool thing with scalping. Now, if you don't scalp and you go for a bigger target, you just have to accept the fact that your win rate will go down a bit because sometimes it just doesn't go that far. And you just took the loss because you went for too big of a target. And that's just the way it works in the markets. I struggled with the strategy as well, right? It took me a long time to learn Pats. I think I started like looking at the videos, the Pats videos, I think in like 2018, I found it. So it took me a long time. Now, I didn't trade it consistently that entire time. I was dabbling with other strategies. I was creating my own things. I didn't like just do Pats. I did other stuff. And so I didn't like, I wouldn't say it took me, like, it wasn't like I did it for like several years in a row and then that's what happened. I would dabble with other strategies, right? It wasn't until I committed to only doing that and not dabbling that I did a lot better and really, really learned the methods. But the other thing is, most likely, if you're having problems, what it probably is, and I'm not trying to be rude, I'm just going to be honest. What it probably is that you're actually tilting when you take losses. That's my guess, right? Just from talking to so many traders over time and my own experience. And that was like one of the biggest problems for me with learning this strategy. it hurts really bad when you take a 14 tick loss after having like 4 trades that won in a row, right? And you just basically erase your wins. And psychologically, you're like, wow, I just wasted 2 days or whatever. You know, like that's what it feels like at first, but you have to get out of that mindset. You have to be prepared for the long term. And that's a big, big deal. That's a big deal. Like you have to be mentally prepared for the long term of this and understanding that like that's just you have to be really, really patient in evaluating your setups, and you can get to the point where you have over an 80% win rate and then over a 90% win rate with this. You really can. It's totally feasible. I know it because I've done it. It's hard. It is hard. And it took me a long time, but that's why I created what I did, right? That's why I created what I did, because I found that when doing it just with like the manual and watching like the daily review videos, it wasn't enough for me to really learn the strategy properly. I had to suffer a lot of losses and a lot of hard moments before I really understood what was going on and how to read the price action better, and also how to master what I was doing in myself. Because what would happen is I'd take a loss and then I'd take every green arrow setup that I saw, even if it wasn't really even a green, because I'd be trying to force the setups to make my money back, right? And then I would, in hindsight, evaluate my chart and go, you know what? There are some seriously stupid trades that I took. And that's what I would see. I would be like, oh, this is a triple test, and I'd mark it and take it, lose the trade, make things worse. And then later on, I'd be like, wow, that's not even a setup. What am I doing here? And that's something that really came up over time. So, so you have to bear that in mind. And the other thing is, like, it's beyond just your mentality. It's also like, do you really understand the strategy? It took me a long time to really understand the nuance of price action. And you can ask people in my paid community. A bunch of them are on the stream right now, and they'll tell you that, like, there's questions that they asked me. A lot of them had read the manual and been trying to do this for a long time too. And then, like, they got clarity going through my course the first time on things that they just didn't understand. Or they asked me a question, or I covered it on one of our weekly Zoom calls, and they're like, wow, now I get a concept that has been, like, troubling me for a while, or just didn't make sense until whatever. And that's not me tooting my own horn. That's just literally I created something to fill the gaps in what I thought was happening with understanding the strategy overall. And TraderRater is right. If you're in the paid school community, you can post trades in there. You can post a trade in there, a screenshot of it, and I'll tell you where I think it might have went wrong. Sometimes I can even reply with a Loom video where I analyze things. Like, it's helpful for everyone to learn, and that's the whole purpose of it. You can post it in the school community tab. You can post stuff in there and get your questions answered, and it's really good. Also in Discord in real time, you can ask about things, and you'll learn that way while we're trading during the morning session. You can ask questions in real time. I give feedback. When you're trading to be effective, you have to be very, very present in the present moment. You can't be allowing what happened to you in your last trade or whatever to affect your current trade and how you react and how you look at the market. Every single trade has to be evaluated as a new opportunity, and you have to approach it with a clear mind. If you can't, then you have to stop and start trading on sim and work on your psychology for a little while. Because if you're thinking about what happened to you after losing, like what I just said, and how you feel, then you're just going to lose more. You're not going to read the price action properly, all that stuff. I mean, it even happened to me recently. I think it was last week on Thursday. I told people, I said, hey, I took 2 losses and I had to stop for the day. I had my worst day that I'd had in months. And I had 2 trades and they were both losses. And I talked all about it on the live stream. And I was really honest with everybody about where those losses were, what happened. The first one was just not a good setup and I was being impatient. And then after I took the loss, I took a trade that was a decent setup, but not ideal. And it was still a green arrow at best, and it was a bad decision. It was a congestion trade. And it was because I took that loss and I allowed it to carry into the second loss. And that was me making bad decisions. So I followed my rule, which is if I take 2 losses in a day, I stop. I evaluated it, and I was honest about my evaluation. And also, I shouldn't have traded that day in general because I was having some personal stuff go on in my life from the day before, and I had a bad night of sleep, and I had all this other stuff that affected me, and I just shouldn't have, literally shouldn't have traded on Thursday. I should have just looked at the market or traded only on sim because I wasn't feeling right. And I broke some of my own rules and my own routines, and I suffered for it, and it was my fault. It was all my fault. It wasn't that the strategy failed. It was my fault. I'm the reason that I took losses. Not the strategy, not anything else. It was my fault. And that type of ownership and understanding is what has made me a successful trader at this. So keep that stuff in mind. Like, it's really important stuff. All right, here's your other question. So sometimes you see 2 legs down and a failed second entry short forms. You take the long and lose those a lot. Well, don't take failures. Do not take failures at first. Or you see a downtrend break, second entry short, you take that for the new extreme and it reverses on you. Those are your biggest losers. Okay, so what it sounds like to me is that you're trying to take failures when they're not actually a failure, or you're trying to take the move to a new extreme and it's actually a failure, and the reason it's a failure is probably because you drew your trend line wrong. That's my guess. My guess here is that you're possibly drawing your trend line wrong. One of the biggest problems I see is that traders learning this make their trend lines too wide. I see this all the time. People come in and here, I'll go to a blank space on the chart. People come in and let's say the trend line is like this. Right? Let's say the trend line's like this. People try to draw something like this. Right? They really want to find the wider channel when that's not the case. Because like what people will do is, let's say the trend line is has some price action in it. You know, let's just say it has something like this. You know, whatever. I'm just going to draw some real basic lines here. So just bear with me as I draw these. So let's say this is your trend line right here. And then, you know, basically this happens. And then this. I'm just going to draw this out. Bear with my drawing for a second, because this will actually all make sense to you in just a second. This is a pretty common thing to happen, right? And then price will maybe do this. This is a pretty normal pattern to see, right? And now, this would be a failed second entry short that does go long, right? This would be a failure. This would be one where you get a close outside, move to a new low, we come up, we make a higher low, and then we make a second higher low. It's a failed second entry short, and we have a new trend pattern maybe that's in play. Maybe there's a trend that like is something like this, you know, whatever. I'm just, you know, here, just to make this more reasonable. Maybe it's like that, right? And that's the actual price action. So that will happen sometimes. But here's the thing. What I see so many traders do when they first start learning the strategy, they always want to think that there's a wider channel. They always want to think there is. So they'll go like this, right? They'll go like this. And they'll be like, well, that fits off the midline right there, so that must be the channel. And then they'll go short here and they'll lose that trade. It sounds like this is what is happening here. It sounds like, on the one hand, you're trying to take failures that you probably shouldn't. If you're not profitable on the strategy, you probably shouldn't take failures, right? You just shouldn't do it. If you're not profitable on the strategy, you shouldn't take failures. The other thing is, draw your trend as short as draw your short-term channel and assume that it's right before you start widening channels. You can draw widening channels as a possibility, but like, and remember, like, okay, let's say the EMA is kind of going up, you know, it's a key area. Like, there's a lot of reasons to not just take this short. So this is one of those ones where maybe in a situation like this where you're going for the new extreme, maybe you wait and see if the price does this, and maybe if the price comes back and does a lower high here, then maybe you take it, right? Because then maybe it will go down if this was a valid channel, something like that. But you need to have some confirmations, not try to catch the absolute extremes, and not play the failure game in the beginning. So anyway, hopefully that's helpful for you. But I see that happening all the time with traders who are newer to the strategy. They just don't understand the nuance of how to draw the trend lines. And that's why, like, when you go through my my paid materials, the course, I spend a ton of time talking about the nuance of trend lines. But the other thing about it is I have a ton of videos from actual weekly calls where I literally spent like an hour talking about trend lines and just mapping them out, covering them, drawing them. Like, when you go through the actual materials, there's just so much in there where I discuss all that stuff. So just hopefully you're still here and you heard all that. Hopefully, even if you're not, it helped somebody that's struggling with that.